However, in my late 40s, I watched my parents run out of money. And I started thinking there must be a better way to do this. And that's when I discovered private investing. And there's investments that most of us have access to, and they all revolve around Wall Street for the most part. And then there are investments that the wealthy know about and have access to because they grow up that way.
That was Holly Williams, founder at keepmore.com and author of Hidden Investing, What the Wealthiest 1% Know That We Don't. In today's episode, Holly will tell us about watching her parents run out of money in retirement and how that set her on a mission to understand why the wealthiest don't run out of money. Stay tuned. The limited partner shares in the potentially outsized returns of a well-planned and executed investment, but as a passive investor, and has the maximum leverage on their most precious asset, their time. And that is why we're here together. 90% of the millionaires out there built their net worth with real estate. However, 0% of the billionaires are hands-on managing their real estate assets because there simply isn't enough time. My name is Jake Wiley, and for the past 16 years, I've been investing in real estate, and I've learned a thing or two. But the most important lesson is how to leverage the expertise and time of others to maximize your investment potential. Welcome to the Limited Partner Podcast. All right, welcome, partners. Again, I'm your host, Jake Wiley. This week, I'm joined by Holly Williams. So Holly is the founder of Keepmore and author of Hidden Investing, What the Wealthiest 1% Know That We Don't. Holly, really excited about having you on the show because I think the message is going to really resonate here, but welcome to the show.
Hey, Jake, what's going on? I'm excited about being here. What's happening?
What is happening? Well, we had a really cool conversation right before we started recording here, but I do want to give our listeners out there a chance to get to know you a little bit better and tell your background. So if you wouldn't mind, just start with a little bit of background on who you are and kind of where Keepmore came from, and then really more about the book and why you decided to write it.
Yeah. So, I did everything you're supposed to do. And I watched my parents do everything that they were supposed to do. And like most people, I worked my way up the corporate ladder. I originally from Texas, but I've been in New York City for 30 years. I'm up here right now in our house up in Woodstock, New York. It's the summer and we spend summers up here a lot of the time. And, life is good. What happened was, I'm 60 years old, believe it or not. And I think that's important because if you're younger than that, you're way ahead of the curve, right? So, however, in my late 40s, I watched my parents run out of money. And I started thinking there must be a better way to do this. And that's when I discovered private investing. And there's investments that most of us have access to, and they all revolve around Wall Street for the most part. And then there are investments that the wealthy know about and have access to because they grow up that way. And they also, basically to invest in a syndication prior to entrepreneurs like myself getting into this, you really had to have a $30 million net worth and 10 million of it needs to be liquid. And that gets you into the Goldman Sachs, wealth management or the BlackRock, whatever. And if you go to any multifamily garden style apartment in America and, ask the people that work there, hey, who owns this? 9 times out of 10, they'll tell you the management company, the name of the management. They don't know. And who owns these things are these very wealthy individuals that understand what the power of investing in them. And I found that you can do this passively and, basically get cash flow without touching the principal. And the problem is with the stock market and better returns, but that's not even the main thing, The world is set up. The first thing that happens when anybody meets with a financial advisor, they ask you, how long do you expect to be retired? So, our system is set up for us to die broke. And once I realized that and internalized that, and then tried as a limited partner an investment in a multifamily syndication, and I saw for myself the money going into my account and that I wasn't doing anything, I was like, this is crazy. I didn't think it was possible, but this is what the wealthy do.
Yeah, you're spot on. And we were talking about right before the show, like I have been in this industry for years. And, like I started out my career investing in rental properties, singles,
Me too.
doubles.
I did some of that as well.
And working my butt off. And it turned into like a second job. And one that was like really penalty laden, if you will, right? Where it's like I was canceling vacations because, tenants were having issues. I was doing $4 an hour back in the day, work because I couldn't get anybody to help me. And it's like, what am I doing?
I knew about real estate. Right? The thing I did when I got a job in Manhattan, I came up here, and it was back in the day when you could work really hard and buy an apartment, and I did and did well on it. And then I moved. I met my husband. We moved to Brooklyn, and he had a 4-family house that he had inherited, and we renovated it and still rent those apartments today. But when I discovered that you could make passive income, good passive income, and have a paper loss at the end of the year, just like if you own the real estate, because guess what? You do, right? It's really just a bunch of people that bypass Wall Street and buy an apartment complex. And when I discovered that passive loss, depreciation that you can do with real estate, and that a lot of it would offset income from rental properties, that's when it really got amazing. And I had to take my husband to 3 CPAs because he was like, we are going to jail. You cannot do this. So when I began I had a good friend that got me into this basically. And that's the only reason I did it. I invested, as a limited partner with his first deal because I was helping him. I didn't even know what it was. And I discovered it. And then he called me and said, listen, do you want to participate? And I need you, I need to raise $1 million. And I started calling these people in Manhattan that I've worked with forever, whose net worth is much larger than mine. And they were like, Holly, do you want a job? Do you, I invested in a land deal a few years ago and lost money. They don't understand. And especially if they're on the coast, they don't understand that you invest for cash flow or you invest for appreciation. And it's not the same primary objective, right? And so if you do this correctly and you invest with people that have run businesses before and know how to execute a business plan, and the business plan makes sense, I believe that in many cases, there's nothing that's guaranteed in this world. There's nothing that's safe, but most of my net worth is in multifamily real estate now. And it has been an amazing thing. And I live now pretty much off of my limited partner investments.
I want to bring up a really important point that you just made, because it is so impactful with limited partner investing or just investing in a syndication, is that you are creating passive income. So what most people think about passive income is like when you retire, you start drawing down on your wealth, right? So like you said, selling investments, you bring in a little bit of income. The distinction that you're making here is that with a real estate, with a syndication or investing in a syndication, you get passive income and you're not drawing down on your principal, right? You're creating an income stream and you're still building the principal on the side, which is like, it's like a mind-blowing concept. And I'd love for you to talk about that for a minute.
So that's what happened to my parents, and I watched it in real time. You see, as a limited partner in every deal that I've done, and I've done like over 18 syndications. I actually haven't counted them lately. And I just keep rolling them over and one offsets the other. And it's been pretty magic. But what happens is that, our system is designed for us to die broke, right? And Wall Street isn't about creating generational wealth. There are debt investments and there are equity investments. And I didn't realize that. I also didn't realize that the stock market is what's called a secondary market. By the time we get a chance to buy the stock, the Goldman Sachs, really rich people and all of that, Fidelity, Vanguard, all of them, the wealthy, uber wealthy, have already gotten in and gotten out. So the big money is made when you make, a first position, rather, when you really make a debt. I mean, they're investing in companies, truly. They say that we are, but what we're doing is we're investing in mutual funds that own stocks, or we've got our money with the financial advisor that gets paid whether we make money or not. The other thing is, they're telling us, oh, be in it for the long term and all this, but they're trading in nanoseconds. The people that also work at these firms, they have access just like the wealthy do too. So my financial advisor wasn't investing in the same things that I was investing in. So, what happened to my parents was that, so the stock market goes like this, right? So it's really down right now. As I sit here, this thing is down like 60%. If I'm 60 years old, I don't have time for it to go back. It may take 10 years before it gets back. In the meantime, I need to start retiring soon, right? And so I have to withdraw this. And in fact, when you get to a certain age, the government makes you withdraw it. And then what happens is that 401k isn't even taxed as capital gains. It's taxed as regular income. So we hear, oh, it was tax-free, right? First of all, let me just give a disclaimer here. I'm not a financial advisor. I am just talking about my personal experience and what I've learned about, but I have no qualifications. I have nothing here but personal experience. So please do your own research. I wrote a book about all this, right? The myths of investing and what we're taught versus what I personally have discovered. And that's what hidden investing is all about. And, every time I talk about it and I give a talk around that, at conferences and so forth, every time I say, listen, please investigate what I'm saying. And please let me know if I'm saying anything that is an exaggeration or not true or whatever. And it's been 2 years and no one's called me and said, Holly, you're wrong. Even my Wall Street friends.
That's impressive. I can't post something on LinkedIn without somebody telling me I'm wrong, just for the sport of it.
When you know the truth, right? When you really know the truth, you're like, wait a minute, something's not right here. And, I'm still in stocks. I really like my financial advisor. He's a great guy. I feel bad every time I talk to him. I take more money away from him, but I still have money with him. Because I think that, they care. These guys are not bad. Wall Street is not bad because they are taught the same thing that I was taught in business school. I mean, I went to business school. Nobody ever taught me any of this. And so I go out, I graduate, I get a job, and so these people are graduating with the same business degree I have. And then they're entering Merrill Lynch's training program or Fidelity or I love when people say Vanguard, I'm investing with Vanguard, index funds, and they don't charge fees. Are you kidding me? There are so many fees in these mutual funds. And then the other aha moment was when I really started making some money. And when I first started out in business, I was, you say, oh, wow, I made $10,000 according to this 1099, right? I didn't realize that I was paying taxes on that money and I never took it out. So when I got a 1099 that said, congratulations, you've made $75,000. And oh, by the way, you owe $40,000 in taxes. I was like, I won't tell you what I said because there may be children watching. And it was, all of this has been such an awakening that I just have to tell everybody about it.
As we think about the purpose of the show, right? It is education and trying to enlighten the world that this is an opportunity and it's real and people are doing it.
People don't realize what kind of an opportunity these things are.
Yeah. And I guess here's my question for you is what is the first step? How would somebody kind of take that first step and say, I want to investigate this. I want to get involved. This is making sense, right? It is making sense. What would you recommend?
So they can call me, They can call you. There are people, I talk to people all the time, and it's important to me. So when I have two different partners that I work with, and we find projects and get the business plan together, and I have criteria that I never vary from. So that's why I did 10 or so syndications in 2019, and I've done one this year. So my whole objective is cash flow. It has to be making money now. It has to be able to afford a 20%, 30% hit in income before it's that big of a problem. It has to, I have lots of criteria that make it for me because I can't afford to lose money. So capital preservation is first. Cash flow is second. And if there's appreciation, we force appreciation typically, and that's another conversation, but I don't even concern myself with appreciation. And we've been very successful in forcing that appreciation by improving properties and making things a better places better for people to live. But it's got to be pretty occupied. I don't want to throw out bad tenants. I don't want to, fix crime. And I don't want to do any of that. I want something that is cash flowing, that has an opportunity for us to do things to make it better for a working person to live, which is awesome. And we're making neighborhoods better, and we're making people feel better about where they live. When you feel better about where you live, you feel you're empowered and in other areas of your life. And it is a beautiful thing. And when I am on shows like this and I talk to people at conferences, I feel like it would be immoral for me not to talk about this.
I like the way you put that. And there's a point you made there. And again, it harkens back to something we talked about before, is cash flow.
That's
so
right.
Real investors invest for cash flow, right? So when you look at what an investment is, because there's like really an investment that creates cash flow, and then there's speculation, right? Which is banking on appreciation, which is very different, right? Because the market, let's just say you're banking on appreciation and you bought something mid last year, and now we're going through like a market change. Is that a sure thing? No. But like if you have an investment that is kicking off cash flow, to your point, it's occupied, right? It's already got tenants in there. There's, the macroeconomics and the microeconomics are showing that there's a net in-migration of people. It's going to put pressure on rentals. There's a lot you can do, but when you are confident in the cash flow, and then you talked about a 30% kind of gap between like, hey, where would the income have to go down to before this thing gets in trouble? And you're saying, well, we need another 30% of decrease. Like those are all very important aspects to an investment that creates cash flow.
Correct.
And creates, capital preservation. Because again, like I think what the magic here is that it creates cash flow. This is like your point earlier, is that when you invest with somebody like a mutual fund or whatever, they're basically asking you, when do you think you're going to die? And we want to make sure that like you have your last dollar goes out the door right before you die. So like, what a morbid thought, right?
It's horrible. It's criminal. It really is. And the fact of the matter is, it's not criminal. It's more like they don't know. My financial advisor, people that Wall Street is investing, invests alongside me. My friends that are Wall Street people and that were, I had a 30-year career in market research, right? I worked for companies like Nielsen, Arbitron, Comscore, and large market research companies. And, I had a good time, but we didn't learn any of this, and they don't know. So every time I do a deal, one of my colleagues at least comes, okay, now what are you doing again? Tell me about this. It's pretty interesting. So it's very pedestrian. Now, I will say that I know a lot of people that do things like build to rent. They'll buy a lot and they'll build an apartment complex, and a lot of them are really smart people and do a lot more than sheer speculation. You have to get people who are business people, right? And so you can invest for appreciation, but it is risky. So there are risky investments and there are not so risky investments. And it's interesting because my daughter just graduated from high school, and in New York State, they have this 529 plan that you can invest $10,000 a year and take that off your New York State taxes. Well, so we started doing that when she was born. I want to be this kid, right? But what's interesting is that, this was 18 years ago, and I just put money in this 529 plan, and I just started taking it out and I had moved it. It's this age-based thing, right? So Wall Street, I guess this is, it's run by Vanguard, whatever. And they have this age-based thing that gets more and more conservative as the kid gets older and older, right? Well, this is supposed to be the most conservative time ever. She was a senior in high school. Now the stock market crashed. What do you think happened to her 529 plan in this really conservative thing? And went down 20%. Well, are you kidding me? I got to take it out now. She's going to college. I got to take it out. And, conservative to me is like a money market fund or something. I mean, by that time, that's what you should be doing. But they're not doing that either. It's unbelievable. It really is. And nobody's watching this stuff. And it's, and I'm fortunate, right? I mean, it's okay. I had moved some other stuff because I don't trust Vanguard in the first place. So I moved half of it to a total like income fund that made like 2% or something. And you can withdraw from specific areas of the 529. But the other stuff that's in this supposedly age-based option, I mean, I'm averaging. It went down like 30%. I mean, it's nonsense. And so
that's amazing.
Right. And I'm glad I took half of it and I've got enough for her a couple of years or whatever. And I'm fortunate. She's our only child and blah, blah, blah. But not everybody can. And if you believe this, and that's what happened to my parents, they were like, wait a minute. You know what's a real shame is that I was able to help them. That's not a shame. I was able to help them in there because they were getting killed with taxes. And I was like, listen, don't withdraw that IRA money anymore, right? Because you're paying taxes on this stuff and I'm making money and I'm paying taxes anyway. So they left me this IRA and that's really all they had left. And it was like $80,000 when they died. And if I hadn't been able to help them, it would have been bad. That IRA is an inherited IRA, so I can't do anything with it except I left it in there. And what's interesting to me is that I left it in there exactly what it was. My dad had it. And it was supposed to be so conservative for them to live on in retirement. And now today, and they make me take out some stupid formula, right, of what they make me take out like 7 or 8. And I've been putting it into my daughter's 529 plan all these years. Now that $80,000 in this conservative thing is worth, I just looked. I mean, I just got the statement. It's like 130,000. I mean, it was supposed to be super conservative. It wasn't because the stock market doesn't pay attention to it. These financial advisors, and we don't know how to pay attention to it. It's just a racket.
I think like what I see, like the hesitation is that most people start their investing with a 401k, right? Because you go to a company and they're like, we're going to match you. And then the common sense is like, you're an idiot if you don't take the match. And then that becomes your investment plan, right? And then a lot of times you're like handed an advisor through your company, or maybe you're given the option of like choosing one. But when you think about your money, like the investment that you're making, the money that you put aside, that is, to your point, like it's how we're trained that it's supposed to work. And as we think about this transition into potentially doing real passive investments, investing in a limited partnership, it's very different. It feels different. You're going to have to do a little bit of work. You're going to have to like go interview people. You're going to have to think for yourself and not just like say, okay, look, the company has chosen this person. And I think that's a big mind shift. How are you seeing people get over that hurdle? Or what is it taking to finally break through it, just saying enough is enough?
Well, that's why I wrote the book. If you read my book and there's 10 myths, it's an easy read. And if you believe that, then you have to go somewhere with it, right? And so that's why I wrote the book, because it is mind shift. And you really have to understand, internalize the things that we're talking about today and understand that the system is broken. So I told you, we don't know what's going on, with the stock market or whatever. I over communicate. I know them all personally. It's a community of like-minded people that my goal this year or next year, over the next 12, 15 months is to really build out that hidden investing community, because it's so much fun. I've gotten to be friends with so many people, and, it's all like-minded people. And I over communicate because you're on the same team here. So my investors know what's going on. And like, for instance, when COVID hit, right? Nobody had ever experienced anything like that. And when the government says you don't have to pay your rent, and I own apartments, the first thing we did was we said, look, we're going to save cash. So we're going to suspend distributions for everybody and see what happens here. And then we're going to help these tenants and be a good steward, because we don't want to be slumlords, and we are going to do our best to work with everybody and get the rent paid. And we hardly had a blip, because you get what you give in this world. And I've made more money on these deals by being a good citizen and really trying to help the working American, because nobody cares about the LVN at the hospital. Nobody cares about the cops and the firemen. Building new product is coming on the market, and it's all luxury Class A stuff. Or you've got really Class C, D, new Section 8, the government really, government housing, that sort of thing. There's not a lot of Class B product out there being built. And our residents, once we get involved we lose tenants when they buy a house, we lose tenants when they get another job and move to a different state. A lot of our tenants are retired and so forth. So we don't really lose that many tenants to competitive Class B properties because there are so few of them, number one, right? So I feel good about what we're doing. And, I sold market research for a long time, and it was fine, right? But I wasn't saving hungry children. It's been very rewarding, and I do a lot of limited partner investing. And I've also, through the years, discovered other things that the wealthy have access to that we don't, like oil and gas that's cash flowing. It's a little riskier maybe, but you know what? We need it, and it's there, and it's cash flowing, right? And there's a lot of things that the wealthy invest in. We don't have access to these things, and these are equity investments. And the other thing is the fees, right? Yes, you got to live, right? We take fees on the general partner side, but listen, it's nothing like a mutual fund. That's all I'll say. People don't even realize what they're doing, but they're paying. They don't even tell you. They're really not nice.
Yeah. There's something you said in there that I do want to kind of bring back up to the top, because I thought it was great, is that if you read it, you learn it, when we're talking about passive investment, and you believe it, you have to do something. So there's, for you guys out there that are listening, like maybe this is like a warning, and that like, if you're not ready, like don't start learning about it, because it is very, for me, I started a podcast. I've been investing for 16 years. I can't let it go because I've seen the truth now. So if you're ready, like jump on the bandwagon. There's so much information out there. But I thought that was a really great point.
Right. And that's why I wrote the book. And your listeners can get this free, right? Just pay for shipping and so forth by going to my website, hiddeninvesting.com, and buying the book and just putting keep more as the coupon code.
Awesome. Yeah, we'll put that in the show notes. But thank you. Thank you for that.
Exactly. So, you got to get the mindset first. You got to believe what I'm saying. And again, don't believe me. Look at your life. And, there are people that are really smart that think this is a scam. And they're buying annuities and things like that. They're just, oh my God, you put $500,000 into an annuity. Oh my God. It's just criminal.
Yeah, Holly, this has been an amazing show. I like to end every episode with gratitude, right? Because somewhere along the way, you got a lesson, or somebody gave you a leg up that you probably didn't deserve, that really helped tip for you. And I'd love to give you an opportunity to give somebody a shout out.
So the guy that I'm talking about, that I've known for a long time before he ever got into this, is a guy named Joe Fairless. And his goal was to create $1 billion company, and he did it. And I helped him early on. And it's just really interesting because, I helped him, and we just did a deal in Louisville, Kentucky, and he helped me, And so I guess, you really have to hang around people that he's smarter than me, he's harder working than me. And, he learned the knowledge as well, but I knew he was a smart guy. And I knew that his mindset was the same as my mindset by that point, and that he was looking for a better way. And he has selfishly, now that he's on the other end of it, because I remember he didn't have any money. And so there's really, people say passive, you have to make the money somewhere. You have to work hard and be able to invest passively. But once you do, this really is about building that generational wealth. And the cash flow is like they tell us that the 401k is supposed to be. But if you do it right, it really works.
Well, Holly, thank you for that. I echo your thoughts on Joe. He's an incredible guy, very smart, very just helpful. So it's kind of a rare combination, but less so actually in this industry than you would expect.
It's all a mindset, right? And that's what I love about these things too, is that we're really a group of people that are investing in apartment complexes. And so before anybody invests with me or alongside me, I talk to them, I get to know them, because it really is important that if COVID comes along, everybody understands that preferred return's accruing. We've made money on all of them. And once we realized that it was okay, but you want to invest with conservative operators that have, intentions and goals and are in the game with you.
Absolutely. Well, Holly, thank you again for being on the show. I really enjoyed this conversation.
I did too. And thank you so much for having me, and everybody have a great day.
I hope you've enjoyed today's episode, and I'd actually love for you to contribute to a future episode. If you have a question you'd like answered, or a topic or a guest to bring on the show, please email me at jake@thelimitedpartner.com. Now I realize there's a lot of lingo that's thrown around on these shows, so I've created a cheat sheet for you with the top 26 terms that come up most often. Head on over to thelimitedpartner.com/lingo for the list. Enjoy, and we'll see you next time.